As a mortgage broker, I was taught from a very early stage in my career that all clients should have life insurance and critical illness cover to cover the cost of the mortgage. IPAW made me rethink that and think carefully about whether or not critical illness is actually as important as income protection. And when you speak to most clients about it, they'd rather have income protection.
Good afternoon and welcome to day 4 of IPAW 2023. Now, whether you've been following us all week or joining us for the first time today, welcome. I know that there will be something in the next hour for everyone, whether you're brand new to IP or have been immersed in it for decades. Today, we're going deep into the world of underwriting and claims. We're going to look at some of the different approaches that advisors take to engaging with clients around underwriting and discuss how to increase the chances of a smooth journey and how to deal with the bumps on the road. We'll then jump forward to claims. It's important to talk about this, not just because the claim is the product, but because the greater frequency of claims for income protection mean that as you start increasing sales of IP, the chances are it won't be too long until your clients start claiming on the product too. So we're delighted to be able to discuss what that process looks like and the part you can play to help your client through that journey. We'll also take a look at how insurers look to play a role not just in writing the cheque, but in helping people where other services may not in today's climate. Now, as always, we want to start conversations, and we know how keen advisors always are to talk about underwriting. So please do share your thoughts on socials using the hashtag Let's Talk IP or IPAW 2023 to engage with other advisors and insurers around this today. So our first speakers today join us from iPipeline. Charlotte Harrison is going to talk through how they are seeing the IP market grow and evolve, and we'll be interested to know how your experiences compare. Chantel is then going to share some ideas for how some of this success is occurring, with an insight to techniques successful advisors are using today here.
Hi, I'm Charlotte Harrison, a Senior Product Manager, and this is Chantal McGill, a Senior Trainer at iPipeline. I'm going to give a brief overview of iPipeline's view of the income protection market, and then Chantal will give some hints and tips on selling IP. We have seen a continued growth in income protection, with just over 28% of our links last month containing IP, up from 22%. With Solution Builder, we have seen an increasing trend towards multi-benefit policies, and IP is no exception. Just over half the multi-benefit cases in Solution Builder contain an IP benefit. Recently, we've also seen an increase in the average premium for IP policies sold. Equally, we are seeing a high proportion of short-term income protection being written as a multi-benefit, a more cost-effective way of getting IP into a multi-benefit bundle. So what's caused this growth? A lot of the growth has been recovery to pre-COVID numbers. However, we are now exceeding pre-COVID IP applications, which is great. Along with that natural recovery, there have also been some very positive changes in the IP market, such as new products and more competitive pricing. A tough mortgage market has also helped refocus into the protection space as well. And of course, technology is always helping to make IP easier and quicker to quote than ever. However, whilst IP makes up a fifth of all benefit selections on iPipeline, we would like to get this closer to 40%. We are also always looking at ways we can help access underserved markets. The 2022 Financial Life Survey really highlighted the need for this, with just 6.1% of respondents having an IP policy versus 29% for life insurance. I'm now going to hand over to Chantal, who's going to give some handy hints and tips for selling IP.
Hi, I wanted to run through with you my hints and tips to help with an income protection conversation. So the first one of these hints and tips is to use a risk reality report. Now, there are a number of these available. These can help to show your clients using industry statistics why they need to have income protection. I also always recommend using a benefit calculator with your clients. There's two I recommend. The first is Turn to Us and the second is the Better Off calculator from Policy and Practice. You can use these as an example to show what would be the case if your client was unable to work due to illness or injury. My second hint and tip today is about considering the options. There are a number of different options you could consider. What about, due to your client's occupation, looking at a friendly society? You could also consider age-banded and age-costed products with your clients, as long as you regularly review them. If you're looking at full income protection and it's unaffordable for your client, what about considering some of the short-term income protection policy products? These can offer claim payouts for 1, 2, and 5 years. If your clients work in the NHS, teachers, or civil servants, look at the dual deferred options available, allowing you to match with their sick pay scheme. Have you thought about the impact of inflation on the benefit itself? Consider indexation options with your clients. You can look at RPI, 3 and 5% depending on which is supported by the providers. Now, another option that sits within the income protection service but is slightly different is mortgage and rent cover products. These products will only cover the mortgage and rent for the client, but they can be more affordable than standard income protection products. And finally, tip number 3 from me. Discuss the features and benefits that are included in the products. They can help add value for your client. Things like the minimum benefit guarantee, counselling, fracture cover, access to GPs, second medical opinion, and rehabilitation services. These are things that can help your clients throughout the policy or if they need to make a claim. I'm showing here the product features report that is powered by Protection Guru. Protection Guru's website is a really useful reference point for anyone talking about protection with their clients. And on to the training webinars. We are really delighted to support Income Protection Awareness Week this year, and we are running 2 webinars on income protection options. The first is on Friday morning at 10 a.m. and the second is at 2 p.m. on Friday. If you can't make the live event, you can register and you'll be sent a recording afterwards. These webinars will cover things such as executive income protection, dual deferred periods, indexation, mortgage and rent cover products, as well as other options that could help you with any income protection. Thank you for joining me and Charlotte and watching this video today. We really hope this has helped.
Thanks very much, Charlotte and Chantel. I'll definitely be joining the 10 o'clock webinar tomorrow, although I'll admit it's possible by 2 o'clock we'll be toasting the end of our week here, but encourage you to all join. Now, it's time to hear from some advisors about what they do before the underwriting begins. We've discussed preparation a lot already this week, but it's perhaps even more important for the application and underwriting process. So we just have a quick video now to hear about what different advisors do to prepare for their applications.
In preparation for a client meeting, it's very important that you've got the right information together prior to that. So you need to be asking the client for certain documentation around bank statements, budget planners, some basic medical information, but also get from them their current policies and also understand what they're getting via their employers, because all of that adds to the picture and will help with your recommendation further down the line.
I generally find out about the client's existing provisions, and also it's really important to know what their employer provides them in relation to sickness benefits. Being a mortgage advisor, I'd have 3 months bank statements, proof of income as well, which is quite handy for a lot of the providers to be able to prove income when it comes to income protection.
Being a protection-only advisor, I have a lot of the information ready for me before the client comes over because they've gone through the mortgage application. So the mortgage advisors that I work with, they've got a lot of the financial information already, you know, ID, terms of business, things like that are already there. So what I try to focus on is any up-to-date financial information if they've had any changes. You know, sometimes these applications can go on for months and months at a time, so it's just making sure that the financial information, the income that we've got is correct to then build off of that for an income protection conversation. But what I try to focus on more is the medical information. So I've recently adapted my approach to ask really comprehensive medical information up front to do my pre-underwriting. So I don't like to tell the clients the cost initially, because a lot of the times I'm finding they've got things wrong with them. So it just saves going back and forth. So I'm quite upfront in saying that I'm going to be asking medical information. These are the timescales that they'll look at it over, from an insurer's point of view. And that's what I tend to focus on the most and kind of ask them to prepare for me.
My job's slightly different working at LifeSearch because it's all phone based. So we don't generally get to know who we're going to speak to beforehand. They'll come through the dial or out of our pot that's supplied to us. But I'll always have a paper fact find. I'm a bit old fashioned in that way. And of course I've got a set of questions to work through. And every customer's treated in the same way, asked the same questions, not always in the same way, and obviously introduce myself and a bit of personality and ask them about their lives. It's not just a straightforward tick box exercise.
SA302s and other income documents if they have them, as well as some business bank details.
I usually send the client a health questionnaire before I meet them. I've normally already got their date of birth, address, all their personal information, but I like to know a little bit more about their medical history.
I try and get ahead of the game as much as possible, so when it comes to name, date of birth, when it comes to income protection, really a contract of employment would be fantastic, so then you can narrow down what their sickness benefits actually are, if they receive death in service, that sort of stuff. And then also, what their occupation is and their salary would help to get ahead of the game.
Moving on now to a session I recorded recently with Tracy and Mike from the montage you've just seen, and Anthony, who's another of our 7 advisors, to really dig into the detail of the underwriting process. For those of you unfamiliar with the 7 advisors, a quick reminder that these are real advisors who are sharing their IP stories with us throughout this year. They're sharing their successes and frustrations along the way. As you can imagine, underwriting features quite a bit in their tales, so it was great to bring the 3 of them together to discuss these here. So we have Anthony Andrioli, Tracy Boyd and Mike Roberts with us here today. And we're going to talk about underwriting and how it's introduced into conversations, how to do things to make sure it goes well and smoothly, and what to do on those occasions where maybe things do go a little awry. So could I ask you first, Anthony, how you introduce the concept of underwriting to one of your clients?
Okay, so as a protection advisor at LifeSearch, the customers that we speak to are generally new to us. Okay, so I've gone through the fact find, so found out about their health. Very rarely do you speak to somebody that's completely healthy, and you can just simply say, we'll book you in, you do the application and it's on. But quite often there's going to be need some medical evidence, or at least some additional questions from the insurer possibly. So just tell them exactly what's going to be needed. Is it going to be a doctor's report? Is it going to be a medical? Will they receive any other phone calls? And how long is it going to take? If it's a doctor's report, maybe 6-8 weeks, but we'll keep you informed. That's pretty much it.
Thank you. Tracy, similarities, differences for you in your world?
Yeah, as a mortgage advisor, we complete a mortgage and protection fact find. So right at the beginning of the process, I introduce the fact that we're going to be asking them some medical questions. So I generally ask if anybody's taking any medication on a regular basis. That starts to open things up. Once we've done a mortgage application, I've presented my illustration to a client. I'd also present my recommendations for protecting their mortgage loan. And obviously at that point, when I'm going through everything, before we do the application, I explain that we're going to be asking a lot of medical questions, and it's really important that they answer things truthfully and accurately to the best of their knowledge, because the last thing we want is for a client not to be covered in the event of a claim. But I've started using a new bit of kit called Underwrite, which has started helping when I know there's a medical issue. I'll know which insurers I need to avoid and which ones are going to be a little bit better for certain conditions.
That's great, thank you. And for you, Mike?
Yeah, as an IFA, I tend to be dealing with clients that are sort of over 50, and their medical records may be a bit more coloured, if you like. So asking some medical questions, explaining underwriting, exploring underwriting, it's a very important part of the process. Otherwise, you're starting to make recommendations that may not work or may not fit for their circumstances, you know, because of their underwriting. And I sort of learnt the hard way that you have to explain it, put in a bit of background, use technology just to improve the process and make sure the client's fully aware up front, you know, what could go wrong or what may happen to their premium, so there's no shocks later on.
Yeah, it still does seem like almost that treasure in the income protection cave almost at times, that underwriting knowledge. So you've mentioned Underwrite Me. Are there other tools or how do you, Anthony, go about?
Well, I've been in the industry now for 10 years, so I've got quite a big Excel spreadsheet of all the medical conditions I've heard of and what sort of questions they're like to be asked, and where I've had a good or bad result from a particular insurer. So that knowledge there, a lot of it's already in my head as well, but also I can refer back to it. Obviously you've got Underwrite Me, and then you've got the pre-sales emails or phone lines. You know, so it's just there's lots of opportunities to make sure that you know what you're going to be recommending.
In terms of the delays that will sometimes happen in the process, I know Anthony's already mentioned this, so maybe I'll start with you, Mike, on obviously we're realistic here and we know that is a challenge and probably is more so this year than in other years with increasing challenges for the NHS. So I guess what are you seeing at your end and how do you manage that process with clients where it needs to be managed with those?
Yeah, you know, unfortunately, like you say, that is very common now, and the clients can sometimes lose a bit of interest. So it is something you have got to manage, be very clear up front in terms of, right, this is the process. You know, unfortunately, we've got to write to your doctor. You may even need a medical, but we work hard to sort of manage that process and keep the client updated, like I say, so they're not losing interest or not getting frustrated. You know, use technology. I think providers are trying their best not to use GP reports if they can, because that does add a huge delay. But yeah, you know, phone the doctor, keep the client updated, and then keep it warm, basically. That's all you can do. You know, the time it takes is the time it takes. But if you spent the time doing the groundwork and presenting the information in the right way, then hopefully the process won't take too long.
I presume that sounds sensible to you, Tracy,
yeah,
or any other?
Communication, isn't it? Generally, when there's a GP report, I find a lot of these things are positive, and you can flip it to turn it into a positive, really. With a GP report, they're checking things out with your GP. I generally ask a client to contact their GP and let them know, to try and short-circuit the system a little bit, because you get the old thing of the invoice has got to be raised and we're not going to do that report until they've paid the invoice. So by introducing the client into the scenario and getting them to ring their GP, I find the GP is a lot more responsive to a client. But also I find a lot of people are having health screens now, which are great. I've got to share a story with you if you don't mind. A couple of weeks ago, I had a young chef contact me that wanted income protection. And when I went through the application, I knew we were potentially going to be very borderline in getting that cover, and it was BMI. And the provider got a nurse screening for this guy, and told him he urgently had to go and see his GP. And they 27-year-old lad, high blood pressure, serious problems ahead of him. He was borderline diabetic. He didn't have a clue. They could have saved his life. He didn't get his income cover, but I feel I did a great job for that guy. Really pleased with that. So it can be a positive, and you know, this guy's now on the road to getting fit and healthy, losing a bit of weight, and hopefully
And you've diarised
in a year's
follow-up
time.
in a year's time. Absolutely. Very
I'm
good.
checking in with him every 3 months to see how he's going. But we can always turn these things into a positive, and I know it's hard and it can be a clunky journey at times, but it's like Mike said, it's sort of communicating and keeping it warm.
And that probably flows on in some of the less dramatic examples to where decisions do come back and there's a premium increase, or possibly for IP as often there's an exclusion applied. So Anthony, in those situations, I guess, how often have you been able to pre-warn or start that conversation earlier in the process, and then when it does come, how do you deal with that at that point?
That's a good question. When I'm doing a fact find, I always do the same medical questions with the client. Okay, it's just an overview of all the things they might likely to ask, but not a medical questionnaire. So IP, typical ones, mental health exclusions, for anything, or back problems, lower back or upper back exclusion, and depending on how severe it is or how recent it is, they may have a temporary exclusion or maybe a permanent exclusion. Obviously depends on the insurer. Before that even goes to application, I'll tell the customer they're likely to have a mental health exclusion or not. And if you're open and honest with them, the customers are fine. And quite often, you'd be talking about maybe they've had depression, and I've had depression. I still suffer with depression, anxiety, but it relates to that customer, and they said, I've never had any time to work with it. I'm not really worried if I get a mental health exclusion. It's fine. The ones that are a bit more of a problem are the ones where you weren't expecting it. The doctor's report has come back with something completely unexpected. The client might not have known about the condition, and then you're going back to the client with something we don't know about because the insurer won't tell us why it's been declined or whatever, and then the customer then has to go and find that information out. So that does cause a few problems, but in the main, just an exclusion doesn't cause a problem as long as you explain to the customer what it is and why. And if it's just a price increase, quite often the customer will say, okay, I expected it probably would be more than you said. Fine.
I'm interested there in a detail that Anthony mentioned, which I wonder if you might, on the temporary and reviewable exclusions. Is that something, because this is pretty unique to IP and I think is growing in differentiating different companies. So have you seen those, and how much do those matter to customers, I guess? Is it something that you would choose an insurer on the basis of, or?
Sometimes. Overall, when you're an advisor, you're looking at the overall picture and what's going to be for best for that customer. And although it's on a slightly different subject there, I had a customer that had a vape at a wedding, a friend's vape. He wasn't sure whether it contained nicotine or not, but it was just under a year ago, and he had one cigar perhaps a year. So he wasn't sure, and I said, look, we have to go with this particular provider for you. When you've gone to a year, they don't mind a couple of cigars a year, and we can just simply declare you as a non-smoker after that time. They might do a cotinine test, but then you'll get non-smoker rates without having to do an application, which means that if you have got any further medical conditions, you're not stuck then not being able to get it, or you're stuck on smoker rates. So, all those things as an advisor you have to think of, and that's what experience brings you, and why you get repeat business, customers coming back to you.
Yeah,
that's interesting, isn't it? Because a lot of the providers don't shout about that. And it's something, having been in the industry for over 20 years now, I wasn't aware of until very recently that the providers are sort of offering this.
They offered that to a client of mine, and it felt very fair, because it was quite recent, still being managed. I felt that was quite fair, rather than having a full exclusion or huge rating. They're just a temporary position that's reviewable, and I thought that was very fair. And that, now I'm getting more involved in this IP market. I was quite pleased to see that.
Yeah, and there's parallels, aren't there, to how private health insurance or group insurance and things like that work in that way of exclusions after a time. And I think sometimes in our silo of individual income protection, we possibly don't realise that, that is quite a commonplace thing. Plays quite well, so to do it more makes your lives easier.
Yeah. In terms of ratings, I think, like you say, as long as you've prepared the client, I can't remember a time where a client has said, that rating's a bit too much for me. I just think, as long as you're explaining the process and helping them to expect it. The thing that does get disappointing is exclusions or declines, and you think sometimes the decline is a bit too easy for the insurer to say no, but why not work with us? And like that case, we just talked about, I thought that was more fair and more reasonable, and took account of the client's current position that isn't going to be the same forever.
Can I ask a big question that isn't on here, that isn't scripted, that may or may not be? So if you have a postpone, as in your case, Tracy, you've told us about, or a decline, can it damage that ongoing relationship for you with a client? Because I think that's often one of the reasons that some advisors would be nervous about starting this conversation with a long-term client, probably Mike, especially in your world, where, well, I've got the pension, I've got the life insurance, do I want to gamble all of that for this? How do you deal with that, whether you have that,
I think when I was a younger advisor, or in the past, yes, maybe, but I think as you get older and more experienced, and as long as you again have that conversation with the client that this is a possibility, then and obviously you then blame the insurer. It's not my decision. It's a decision that they've made, and they've normally gone through a full process of the application and a medical screening and contacted the doctor. I think again, as long as you've positioned that, and I think it's just experience helps you with that. But I can't record it damaging a relationship.
No, I can't.
But it is disappointing because the customer's bought into it. You can't get them the cover. That's the disappointing thing. But obviously, as a wealth advisor, you just try other solutions, or I can look at their pensions or savings and that sort of thing. But I think as a younger advisor, I may have taken it personally, or it may have damaged the relationship. But it's just something you've got to prepare for, I think.
I think it's an opportunity to build relationships with a client. You're helping them with their health. Generally, it's because of health why that would happen, isn't it? And if it can put somebody then on the right path to leading a healthier life, I know that's not always the case. There's some things that you just can't help. I understand that. But it's a bit of a problem seeing a positive in everything, but
no, absolutely.
And I think, I've had some customers that, they're very aware of their weight and whatever, and they'll joke with you about it, saying, I'm too fat to get it, aren't I? And I'll
breathe in.
And they'll say, don't worry, I'm planning to lose the weight. Speak to me in 8 months, 9 months time, and we'll. I don't think it damages it at all. I think as long as you've had an open and honest conversation with them, and always honest, they appreciate it, and they'll know what their circumstances are.
Yeah, no, that's really helpful. Thank you. Before I ask you all what's the one thing about underwriting you'd ideally like to improve, I do feel like I need to, in non-apologetic way, emphasise that, and I know we've said it before, there are plenty of applications that go straight through very easily, and all of that. The nature of getting the most value we can in this hour is to concentrate on some of these things that happen maybe less often but are really important, and as you've spoken about, Mike, can be the kind of thing that plays on your mind. But with that proviso, then we can get back on the attack, Anthony. So kind of, what is, if you had your magic wand to try and improve this, I guess what would the one thing that you would look for more improvement to help write more IP business?
Well, I've got 10 years of experience of underwriting essentially under my belt, what no roughly what insurers would be. If I've got a medical condition that I haven't heard of before, or it's a complicated mix of medical conditions, the online tools are not going to help, because Underwrite Me will just bring up a free text box, instantly it's just going to say refer, you have no indication whatsoever. If I can't ring that insurer and speak to an underwriter, or they won't accept an email query from me, they're not going to get the business, because it's a complicated question. Their online system is not going to answer this for me. I already know most of what they're going to tell me on an underwriting system. I need to speak to a human being or email a human being and get that answer.
Yeah, thank you. Tracy, I'll give you the magic wand passed over to you.
I'd agree with what you've just said there. The better, obviously all the insurers are great, but the better insurers give you a dedicated underwriter or a dedicated person that you can ring, and you can get through to that person. That is a far greater tool for us, to be able to pick up the phone and talk to somebody, because as a mortgage advisor, when I'm doing somebody's protection, I'm doing their mortgage as well. And once I've done that mortgage, I've gone on to the next mortgage. So it's always a danger that things are just going to get left behind. So to be able to just pick up the phone and speak to an underwriter is valuable for me, and I find that those insurers tend to get more of my business than the insurers that just ring this 0345 number and go through to a call centre after about half an hour, if you're lucky.
Yeah, I think Underwrite Me is a brilliant start on that journey of using technology, but some of the insurers are still only looking for clean cases and it's still referred. So I think, they need to invest or assist tools or engines like Underwrite Me, put more time and money into that to help this upfront process that ultimately helps everybody, the advisor, the client and the insurer. So I think they need to crack on and help develop what is already a very good start.
Brilliant. Well, thank you, all of you, very much for your openness, your honesty, your examples, and some of your wishes as well. We'll see by this time next year how many of those three have come true. Okay.
Fingers crossed.
Thank you very much.
Thank you.
Now, the insurance world is always a mix of personal stories and data. And one thing we hope to be able to do is blend the two. So moving from that conversation with Tracy, Anthony and Mike, we're now going to hear from the team at Underwrite Me. Underwrite Me see many thousands of IP applications every month, and they're going to share some of the insights they have from what goes in and comes out of the underwriting journey for IP now.
Hi, my name is Phil Nash. I'm the Sales Director for Underwrite Me. I'm really pleased to introduce this year's contribution towards IPAW from Underwrite Me. On this video content, we have Chris Monaghan, who's our Senior Marketing Manager, and James Hetherington, who's one of our Senior Development Underwriters. The purpose of this video is to really try and dispel some of the myths around income protection, particularly around accessibility for customers and also around cost. So without further ado, I'll hand over to James and Chris.
Well, James, thanks for that intro from Philip. Welcome everyone to another IPAW, Income Protection Awareness Week in September. After a bit of a rubbish July, we are both enjoying some sunshine, James, and you can see from my face, I overdid it, I think, at the weekend.
Absolutely.
But notwithstanding that, hopefully we'll go through a load of good content for all of our advisor community, and it will give you a bit of insight into income protection, most common disclosures, and hopefully dispel some myths as well. So with no further ado, James Hetherington is going to take us through a deck that will hopefully shed some light on a lot of these issues.
Thank you, Chris, and hello, everybody. So as Chris has said, we're going to be looking at income protection here. The data that we've looked at is the first half of this year, concentrating solely on the top 10 most common disclosures that are made for IP applications. So as you can see here, we've got a list of the top 10. And there's no real surprises here, as the strapline says. We've got a combination of mental health, there's back pain, there's asthma, some family histories. These are all the common disclosures that are made up in any typical top 10, to be honest.
Brilliant. And I mean, that's interesting. And I guess advisors would probably guess quite a few of these, James. How did the percentages of these disclosures, how do they compare against like the wider health data that we see in Underwrite Me?
Yeah, so if I take a couple of examples, let's focus on mental health and asthma, two very common conditions. So mental health firstly. So we're seeing mental health disclosures such as depression, anxiety and stress. And on here, it's representing 20% of the disclosures via our protection platform for this product. Statistically, it's well known that 1 in 4 people in the UK have mental health problems of some kind each year. And also that 1 in 6 report experiencing common mental health problems, such as depression, anxiety in any given week. So really what we're seeing in here, the 1 in 5 really represents both views really. And if we're going to look on the asthma as well, so we know statistically that 12% of the UK population do suffer from asthma. The fact that we're seeing 10% of customers through the protection platform having been diagnosed with asthma is pretty close to representing that said population.
Thanks. So hopefully that paints sort of a bit of a background for everybody on what the top 10 disclosures we see through income protection. This is going to be like that L'Oreal advert. Now comes the science bit, Jimmy. Is it worth just talking through this very colourful slide and what we've seen from the data on PP?
So what we can see on the top orange line is confirmation that upwards of 1 in 2 customers are offered the standard buy now premium. So that's, they make a disclosure of mental health, or it could be back pain, or it could be asthma. There's no impact on their premium at all. And the second line are some of those customers, actually 1 in 4, who make these disclosures, and their premium is subject to a loading of some sorts. So that's what we're seeing here.
So I think what you're saying is that there's a decent percentage who, as you've gone through the full sort of health and lifestyle declarations, can still get really good, buy now premiums for income protection cover.
Yeah, I think if you put the two together, it's basically confirming that 7 out of 10 of the customers are offered immediate buy now terms when making any one of these 10 disclosures, which is obviously a very, very good result.
So this next slide, James, I think is sort of basically giving an overview of what we just went through on the previous slide. There's a feeling that maybe this dispels some of that mythology around income protection being really sort of difficult to get hold of. I don't know whether it's worth just dipping into a bit of that affordability piece as well, and try and just give people watching this video just some ideas of sort of what those buy now prices might look like.
Yeah, so what we're seeing here on this slide, just a very quick overview beyond what you just said, Chris, is we're seeing here with the top orange line, these are the highest buy now percentages that we're achieving through any one of these 10 disclosures. So we can see here on the far right, we're achieving as much as 73% of customers being able to get the buy now price. And on average, the second line below in blue, we can see that, on average, it's obviously always going to be that bit lower, but still achieving up to 70%, which is, a really good result overall, because this is all upfront, able to buy that product at point of sale. In terms of the pricing that you've mentioned, I think, yeah, absolutely. I think it's known that there's generally a public misconception that insurance is expensive. So obviously income protection is going to get caught up in that as well. But I think we're demonstrating here that, people do have access to IP for these common disclosures as an example. And I think if we're going to look from a price perspective, let's just take an example customer, mid-30s, a non-smoker in a typical desk-based job. If they were to apply for, say, £500 monthly benefit of income protection until they're age 60 on a 3-month defer period, the base price would be around just £10 per month, which I think from an affordability perspective for IP, I think is very, very good. Even if you were to look at, we're talking on some of these increased prices as well. If you were looking at, say, a 50% loading for that same customer, you would be looking at a range of between £11 to £14.
So it will lead us on. It's sort of just leading us on. I think it's a good segue into just having maybe a slightly deeper dive for the guys and for the customers whose IP cover is subject to a bit of further underwriting. Again, there's some indicative numbers here, James, but it might be also good to sort of dig in a bit deeper under what sort of stuff we'd be looking at, what sort of further evidence we'd be looking at.
Yeah, so as we can see here, it's confirming that 1 in 4 customers applying for IP, whilst on previous slides we've been talking about who can buy the cover right there and then, 1 in 4 will be handed over to the insurer, where the insurer may want to do a little bit more underwriting. As you can see on the slide here, we've confirmed that there's generally a 60-40% split between refers versus evidence. In terms of what that actually means is, for a refer, typically it would land with the underwriter at the insurer, who may just want to sense check what's been disclosed and decide, maybe there and then, just within maybe 5-10 minutes, whether they're happy to offer the cover or whether they feel they may want to take another step, be that, a form of evidence. For the ones that we know are definitely going for evidence, that kind of evidence can range anything between a GP's report for the medical history, perhaps just focused on that disclosure that they've made, or perhaps just a quick client questionnaire, which is either sent directly to the customer, or perhaps it's just a quick phone call that they can turn around in no more than 5 minutes. So that's the kind of underwriting beyond the online that that
Yeah.
we'll be looking at here.
And then this is sort of the whole shebang in one slide, I guess, at the end of it, just giving a summary of, how many customers out of 10 customers have access to IP cover.
Yeah, so we're just looking at a combination here of the people who are getting terms up front, be that the basic price or the loaded price, and also taking into consideration as well those who are going into further underwriting. So put them all together. In summary, we're looking at an average of 9 out of 10 customers applying for IP for these 10 most common disclosures do have access to IP, and I think 9 out of 10 is incredibly encouraging.
Yeah, no, 100%. And I think, hopefully, the advisor watching this can take, 2 or 3 of these points out. But this is probably the key one, that if you feel there's some barriers to entry on income protection, what we see in our data through the protection platform is actually the opposite. We're pretty confident that 9 out of 10 customers will have access to income protection cover. When disclosing, what are the most common medical conditions that affect underwriting. Brilliant. Fantastic. Good to chat again, Jimmy, and we'll catch up soon. Thanks,
Thank you, Chris. Cheers.
Thanks, James and Chris. A really great summary of what happens when disclosures are made during the IP process there. On a personal note, with my background in underwriting, I'm on record as saying that I expect that as IP sales grow, there will be more investment in time and thought to the underwriting of the IP product. And it's good to see where we are today, as well as considering where things could change in the future. Now, we're going to switch tack for our last session of today for a discussion with claims expert Monica Garcia. Monica joined me here recently to talk about the role advisors can play in making successful IP claims, and how claims teams, the customer and the advisor can work together to benefit all parties. I'm delighted to be joined now by Monica Garcia. Monica, welcome. Can you tell us a bit about what you do in terms of claims and the process that normally happens there?
Hi, yes, thank you, Andrea, for inviting me. So I'm a disability insurance consultant, and I mainly work with insurance companies to try and help them put strategies that aim at achieving the best possible health and return to work outcomes for protection customers. So that being within claims, the introduction and review of early intervention and rehabilitation programs, also training packages for their claims and clinical teams, and really, helping them with any introduction of evidence-based approaches that can be used in this sector.
Yeah, brilliant. So we've got the right person to talk, and independent, so I think you can talk about all different kind of things. I want to start, so I mentioned the timeline of a claim, and I think maybe one thing that we talk about in income protection is deferred periods and things like that, but I'm very aware that for you in rehabilitation and claims, often things start earlier than that. So can you kind of start us off with where you can, or where you see people beginning to get involved from an early intervention perspective?
Yeah, absolutely. I think it may be helpful if we try and put this in a little bit of context in terms of how IP has evolved in the last 15 years or so. So pretty much from a, assess and admit approach to really try and understand what the wider needs of the customer are once, they have become ill or, have acquired a disability and they're unable to work. So, propositions have evolved over time, and the concept of early intervention was introduced a while ago now. We're still trying to iron, what best practice is and all that. But in essence, really, are thinking about any interventions that can be put in place early enough, using a common sense approach, of course, in terms of the timing of it, to help customers get better early and return to work. Now, what it means, I guess, in practice is that, we tend to see this similar trends that occur in the non-insured population in terms of sickness absence. So most people fall out of work due to common health conditions. So they may be musculoskeletal and mental health in particular. And, we know that the NHS has pressures, waiting lists, and that's where, these additional support services come very helpful, with that kind of early acute management of the condition, with a view of helping the customer in regaining function as quickly as they can, really. And then actually taking that next step to offer, where needed, vocational rehabilitation interventions to help that transition back into employment.
Brilliant, thank you. And from your perspective then, so whether a claim is actually being paid or not, is it fair to say that doesn't change all that much from your side, or if and when the claimant actually starts receiving the money, does that change anything in terms of your interventions and the work that you do around?
Yeah, no, I mean, it very much is down to that individual case and obviously the product as well, in terms of the timing. So you might have, an income protection case with a 4-week defer period. So it may be that case goes into payment quite early, but then those intervention mechanisms will be activated, anyway, because that's the right time for that person. You're going to have other cases with 6-month defer periods, which are more common, I would say, on average. And that's where you will see, depending on the condition, the complexity, some of those cases going into payment and those interventions maybe carrying on, or some other interventions starting at that point. So it really pretty much depends on those individual circumstances.
So we hear a lot about mental health claims, especially in recent years. How do the principles you've described apply to claims where mental health is maybe either the primary or a secondary factor in those claims?
Yeah, so I mean, mental health claims are very common, as we know. They're in the top 3 causes of income protection claim. And that obviously mirrors, the similar trend in the general population. So you're going to have the majority of claims that are actually related to common mental health conditions. So they will be, anxiety and depression, for example, general anxiety disorder, depressive episode. They're very common. So the principle of early intervention really is that you want to help the individual very early before symptoms escalate. You want to, avoid obviously as I mentioned, the worsening of symptoms, but actually helping those individuals become aware of when that escalates and what impact it has on their function and their ability to work. So I think that's the key difference, and where we see that NHS treatments focus on symptom management, for example. We see in claims that might not be enough, so you might have learned about your depression, about your anxiety, you can control your panic attacks now, you feel more confident, more comfortable, but the impact on your ability to work it's something that, it's a gap. And so individuals might struggle, with their self-efficacy, so it's that self-confidence in their ability to engage in work again, and that's where we've seen the value of interventions that aim at increasing that sense, of feeling in control again, what you're doing, and also tapping into existing support mechanisms that you might have, like occupational health, via your employer, or in the case of self-employed customers, it can be a little bit more than that because they might not have that usual access.
Yeah, it's fascinating talking through it and just beginning to realise how much more it is than that check every month.
Yeah.
And so I guess it would be interesting though, while we've got you here, to hear maybe in a bit more detail about any specific, I know you can't share individual cases or details, but the kind of impact it can have on an individual and the difference it can make to someone.
Absolutely. So thinking about, case studies, what we tended to see, particularly over COVID, and the impact on females actually was the build-up of stress. So a lot of cases where in that first year, 2020, we didn't see that an increase, but I think it was in 2021 that we started to see perhaps a bit more cases related to mental health. And it's because, the stress was building and then you reach, obviously, a point where people couldn't cope anymore. So that's where the claims started to come in. So this was a particular case of a lady who is a self-employed HR contractor, and that was her situation. Work got a little bit too much. She didn't have that sort of life and work balance, being available 24/7, the change from working in an office to being at home and also taking care of the household. So it was a typical scenario actually, but in this particular case she also had issues with the neighbor. So she eventually was diagnosed with general anxiety disorder. She started taking medication. She actually received really good support via the NHS, but she put in a claim for anxiety because she just couldn't cope with work anymore. She was exhausted, she was anxious, she had panic attacks. So the insurer conducted an initial assessment just to understand what her psychosocial circumstances were, and they observed that she was receiving appropriate treatment, which was actually really positive because we tend to see that there is an NHS postcode lottery. You have areas that are well covered but others are not. So in her case that was great, fantastic, but she was very worried about her work, being self-employed. She thought, I have to be 100% fit to take up a contract. I'm not very confident and comfortable about, engaging in tasks. She had issues with the information processing side of things. So, for example, brain fog, that's when you just can't take in information, it can be quite impairing actually, particularly when you have a sedentary job, of that nature where you have to concentrate and, use spreadsheets and that kind of thing. So she had quite a bit of support funded by the insurer to help her deal, with those thoughts and guide her really on the activities she can engage in a safe manner that are work-related. So, for example, dialing to webinars, where you don't have to put your camera on and, she can just listen, to what's happening, increase her reading ability again. So gradually, I think it was over, 12 months that, she received therapy support in that regard to eventually access a part-time contract in a more junior position. But that, was really helpful to help her have self-confidence before she can think about taking a more senior contract, So she received proportional benefit for a period of time, before the case was reviewed again with engagement of the customer, of course, before thinking about when the claim will come to an end.
Yeah, that's really interesting. And I know from speaking to you here and elsewhere that we could easily do a week on examples of claims. I think though, before we finish this session today, I'd be really interested to hear a bit more about your experience of advisors and their involvement in claims. It can be quite a hot topic, and some advisors probably really want to get involved with IP claims and some probably don't. And equally some policyholders, some claimants might want their advisor involved or not. I appreciate it's high level, but from your sense, what things kind of work? What things do you see as adding value if you're an advisor who, I guess, has someone who wants to help you in this process?
Yeah, so I think my message, to advisors would be, early notification. That's my main message, because you can then activate those additional support services for your customer. So if the insurer doesn't know about the absence, it's very difficult, for them to try and put in place some of those interventions that I mentioned earlier. So that's really important. I would say particularly with mental health claims, being there for your customer, because, in the case of mental health, and as we've seen with other protection products as well, it's a very difficult time for people. So, we can have our memory impaired, our ability to concentrate, to feel informed. So it may be that practical support that you can provide to customers, in that claim and notification process. I think that's really important, and just going through the journey with them and working very closely and collaboratively with the insurer just to understand what are those services available for them. But actually, I mean, even before the absence occurs, I would say just really try and find out what those prehab, those pre-rehab services are, and that might vary from insurer to insurer, because in my experience, I've seen so many cases related to mental health conditions, and a pattern that I tend to see is that people are just not aware about the escalation of symptoms. So, we all have experienced stress, that's a common reaction. But I think in a lot of cases, it's like, I didn't realize that, I haven't been sleeping for 6 months, my eating patterns have changed, my mood has changed around the home environment. And I think we all, can be resilient, but we also have a breaking point, so it's really important to develop that awareness. And that's where I see, those early rehab support mechanisms being very helpful for the population in general.
Yeah, that's really interesting. I think tomorrow we're going to be talking more about annual review statements and the ways that advisors can find to engage with their clients more frequently. But I guess a key message from this is it shouldn't just be about the finances. It shouldn't just be asking, have you changed jobs? But actually to include this and get those early interventions at the earliest point is critical as well.
Yeah, and just thinking that, where possible, where appropriate as well, the insurer will try, and help. And I think something that I take away though, that maybe, we can't resolve all of the problems. We need to be realistic as well. 300,000 people fall out of work every year because of mental health conditions. And I think that's more related as well to the role that employers play. So we really need to have them on board and really have, well-being structures and job design frameworks that take care of their employees, so we have the full engagement and participation of them as well. Because, if we put an intervention to help a customer, an IP customer, and then they go back to the same stressful environment, it's very likely that they will, fall out of work again. So it is a complex area.
Yeah, that's brilliant. Thank you. Yeah. I think there's been a really good mix of kind of practical hints and also some slightly scary big challenges, but we embrace both, and hopefully for everyone there's been something there. So thank you for your time very much today, Monica.
Thank you, Andrew.
Thank you.
Thanks.
Some really good points there from Monica. And just in case we didn't say it often enough, one last reminder that early notification of the claim really is key. The old message of not waiting until the deferred period to notify remains critical, but ultimately prevention is better than cure. So please do engage with those value-added benefits before your client's even off work to help them protect their income fully. We hope that you have taken some ideas of how you could consider integrating new ideas into your underwriting process and have a better understanding of the claims process from today's session. We'd really love to know your one key takeaway. What thing are you going to do differently off the back of the content you've heard today? Perhaps you're going to change something when it comes to how you introduce underwriting, or could you do something to make sure that your client seeks the help that's available from insurers at the earliest opportunity? Let us know with a LinkedIn post, preferably a video if you're feeling brave, using the hashtags Let's Talk IP and IPAW 2023 and tagging us at the IPTF. Now, a quick reminder before we go of the many other activities going on this week. We know many of our insurer and tech members have been sharing content through the week and encourage you to take advantage of that live or later as works best for you. And join us here tomorrow when we'll be here live talking about the importance of ongoing engagement with clients, the role of annual reviews, and the increasing use of benefits provided through IP policies. We'll be joined in the studio by 3 advisors with different areas of expertise in Naomi Greatorex, Emma Astley and Scott Taylor-Barr to reflect on the key learnings from the week and pick up on any of the main talking points. So please do let us know what you'd like to hear about. And yes, I'll also have the same length hair and shade of skin through that broadcast, so that should calm the continuity worries here a little. Now, don't forget, each IPAW lunchtime session gives you 1 hour of CPD, with certificates being emailed out automatically following the session. It's definitely not the only reason to join us tomorrow, but it is always an important one worth highlighting. So, last thing, thank you very much for tuning in today, and we look forward to seeing you all tomorrow. Thank you.